Warren Buffett accumulated most of his wealth after his 50th birthday. What does this show us? It shows us that compound interest and thinking over the long term can pay us great dividends when we apply that right mindset. We live in a world of instant gratification, constant scrolling, constant clicks. Everyone wants everything yesterday. So applying this new mindset will help you build out for the future. In this video, we're going to be talking about 5 simple steps to invest to make your life a lot more easier. Firstly, you want to make it simple and automate it as much as you can. So whenever you get paid, you want to pay yourself first. Have a separate bank account where you may even split up your commissions or your money for investing into a separate account. So when it comes to the end of the month, maybe you want to purchase an index fund or any stocks and shares. You already have that money in there. You don't really have to think about it. It's a very automated process, so you can go ahead and execute on your plan. This is particularly important as well if you're working in sales, as your commissions each month will fluctuate depending on your performance. So if you already have a set percentage that you know that you're going to invest each month, maybe say 20, 30, 40%, then it will just make your life a lot easier when it comes to the end of the month. The beauty of investing is it can be as simple or as complex as you want it to be. If you already have systems in place, you know exactly what you're looking to buy, and you have an overall structure of what you're going to do, everything each month will become much more simple because it's broken down into simple steps to follow. A lot of platforms such as Trading 212 will have automatic systems where you can automatically deposit money each month and have recurring payments into specific stocks and shares. The next tip is employing a right time horizon and mindset towards investing. So how do we actually do this? Firstly, there's some points that we need to understand about investing, and that 5 years can often seem like a long time, but in the market it's actually a very short period of time. Okay, the average investor thinking long term is thinking 10 years and above. So anything that's going on in the market today doesn't necessarily mean it's going to happen in the future. I used to listen to podcasts and read different books on mindset, and some of them can come across a bit wishy-washy, but they're actually right most of the time. Having that right mindset will set you up for success in the future when you're especially investing for the long term, as our emotions can get on our way of thinking short term. Maybe the market's down for a period of time. Often that's the best time to double down on good companies that you're already invested in. Half the time it's winning the battle in our minds when it comes to investing because of the price volatility. So having that right mindset and most of all plan will help you set you up for success. I like to write down my plan before I make an investment and do my research before I enter any position. Probably the most important point of all is to not buy into the hype. We've seen this so many times across so many different asset classes. If we was just to use Bitcoin as an example, when we was reaching the heights of Bitcoin, everyone was talking about it. You could go down to your local football club and everyone will be talking about buying Bitcoin, this, that and the other. People that have never even invested will be talking about investing. Okay, that's probably the worst time to invest. It's often the times the market will obviously tumble down and we will see a lot of corrections in prices. Don't get sucked into the hype and noise that investing can bring. Doing your own research and having your own plan will allow you to stay away from opportunities that are overhyped and overvalued, and it will allow you to have a much more logical and methodical way of getting involved into the market. Now, when we're doing our research, we need to make it as enjoyable as possible. Okay, now if you were just to allocate 15 minutes a day reading up on the news and what's going on within specific stocks, it will help you build out that methodology of investing. Okay, so it'll make the process much more simple, much more digestible when you're looking to build out your portfolio. Don't cut your flowers to water the weeds. Now, if you're doing well in a particular stock, maybe you'll be swayed into choosing average opportunities that look okay, whereas if you just double down on that high performing stock, you're more likely to reap the rewards of the long-term gains. Oftentimes we can get sucked out and cutting our flowers, cutting our winners. One bad stock can ruin even an average portfolio. So it's important to not make average decisions and really think about the opportunities you're getting into if you're looking to obviously hold them for the long term. Understanding and managing our downside risk will ultimately help us when we're making those gains, because winners and losses, they're not relative. Let me show you why. Now, to help understand risk and reward a little bit easier, if we head over to the website Baby Pips and we use this risk and reward percentage calculator, if we started off with a balance of $10,000 and we had a 50% gain, which is a good return on investment, you can now afford to lose 33.3% before your investment will return back to its starting balance. Okay, but if it was to flip this and we had a 50% loss, you would quite literally have to double your investment before you retrieve back to your starting balance or your break-even point. Okay, this is why it's important to water our winners and not try and get involved in average opportunities that you feel are right. Okay, you need to go off long term and you need to think almost into the future a bit by doing some analysis beforehand. Okay, so it's important to water your winners rather than focusing on average opportunities that look good in the moment. Now, if you're struggling to create a watch list, here are a few tips of where you can look to source ideas of stocks to potentially have a look at to invest. Now, every quarter, professional investors have to file to the SEC. This is a body which pretty much states what these investors are investing in, and it gives you updates on their portfolios for the time being. Using Dataroma, we can see what professionals are investing in and have a look at their portfolios at that specific time. This can be a great way to have a look at different stocks and seeing what the big guys are doing to give yourself an idea and start your research process for yourself. Of course, we can't take it as gospel. We do have to add a pinch of salt, as these guys, their portfolios do change and they've got into the market at different points than we may have. Okay, so it's always important to do your research before getting involved if you was to. Now guys, looking at Dataroma, you will have a whole list of essentially super investors and their portfolio. Now for this example, if we was to look at Warren Buffett's portfolio, we can see when it was last updated back in February. So if we click on that, we'll be able to see what positions and stocks he's in, as well as a weighted percentage of each stock within his portfolio. So we can see that most of Buffett's portfolio with Berkshire Hathaway, his fund, is invested within Apple, over half. We can also see the other stocks that he is invested in. Now, again, like I said, you do have to take this with a pinch of salt, as these are not updated every single day and they're professionals and they've got involved in the market at different time points. But it is definitely a great way to start to see what the super investors are investing in, whether they're adding to their positions, maybe they're reducing their positions. It can just be a great way to start that research process. I've attached all the links such as Dataroma in the description below, so go and check them out for yourselves. And whilst you're there, hit that subscribe button and drop me a like if you think I earned it. So I'll see you on the next video.